Hey there, and welcome to Real Investment News. I'm Mike O'Neill. Well, as Betty Davis would say,
fasten your seatbelts. It's going to be a bumpy night.
it looks like we can plan on another big drop after the opening bell. On top of the Dow's historic 1,175 point loss yesterday, Dow futures are pointing down another 170 points. The Nasdaq and S&P are also pointing down, although their futures are not as severe. Now, yesterday's losses wiped out about 6 weeks worth of gains, but you have to remember we are still in this of being a correction, a 10% correction, not an official bear market, because right now we are only about 8.5% lower than the high that we saw on January 26th. So we do have a little wiggle room, but we do also need to be careful. And when you take a look at yesterday's movement, remember, it was around 11 o'clock in the morning when things actually seemed to be getting back up to zero. This was the opening. Things kind of backed up. It looked like we were going to be doing okay, and then the bottom fell out. Now, analysts believe that this was mostly the programmed trading, those built-in sell orders at certain loss points that caused the big drop. So I'm not sure if we're going to see that again today. Now, our losses were reflected around the globe. In Asia, the Shanghai Composite lost 3%. The Nikkei was down about 4.7%, and the Hang Seng dropped 5%. Now in Europe, it's not as severe, and this may give us a little hope. They still have about 3 hours to go, but the FTSE, the DAX, the CAC, they're all down about 2 to 2.5%. And all of this uncertainty is causing the volatility index to soar. Take a look right now, it's at 49.21. That is a jump of 31%. Look at the jump that it took yesterday. Now, the question is, what is behind the plunge that we saw yesterday? Now, there are concerns about the Fed's plan to raise interest rates. Now, that is usually done to combat inflation, but despite our strong job numbers, low unemployment, the slightly rising wages, inflation has actually been low, and there is fear that the Fed may actually make things worse. And can we have a moment of silence for Bitcoin? Take a look. Right now, it is down at least, actually it's down about 1% right now. It's making a bit of a comeback, but at one point today it was down 2%, trading now at under $7,000 each. Remember, this was once $19,300 in mid-December. So we are going to be keeping a close eye on that, but it does look like that people are starting to come back in. Same thing is reflected for the Ethereum and Litecoin as well, and Ripple. There seems to be people buying back in right now. Hey, today we're going to be getting our trade balance report and the Labor Department's JOLTS report. That's the Job Openings Labor Turnover Survey. We'll break those numbers down for you in our later reports. But in the meantime, thank you so very much for watching, and we will see you again after the opening bell.